Okay, we've got data sharing covered. We got open banking covered almost. Now let's talk a little bit about your customer, KYC. Right? How do financial institutions leverage KYC to help better the experience for the customer? Pranava, let me start with you for a change. What's your take?
Yeah, I think from Credit Suisse perspective, we definitely do leverage quite exhaustively because we serve ultra highs and high net worth. So for us, it becomes really essential and mandatory that we really understand the client's knowledge of the investments that they want to do and how they want to manage their assets. And there's a very dedicated team and a servicing team that actually works around behind the scenes of the relationship managers that they work with all these clients, right? So from that perspective, I think it is quite effective, and there are definitely improvements that we can do and we continuously do on that side of it. I mean, it's not like we are 100% there, but we still continue to work towards that. But what is also missing is the same client also does investment banking deal as well, while they're also a private banking customer. We work as two different subsidiaries within the same group. So there are certain restrictions and practices that how we share information across the two different groups as well. So that is where for the last couple of years in terms of the strategy from top down. We have been trying to work towards a single client approach. And when we say a single client view, we are literally trying to build a single client view across the entire Credit Suisse group, across geographies, and within the subsidiaries as well. So that way, it definitely helps. And in terms of sharing the right information for making maybe an IB deal, or maybe even to do a proper private equity investments, or even to do some kind of other structured products that specifically is required for ultra high on the both sides, right? So it's on an onward journey. I would say we are mature enough to have enough data, but not completely there enough to say that we have achieved whatever we would want to in terms of leveraging 100% of KYC, but we are there and we are trying to approach that.
No, thank you for that. Because my whole take right now is, are we getting too lost in trying to tick the boxes in the KYC and lose what I call customer experience and really understanding their needs? Because the whole banking system is shifting towards that. Janita, or you think, no, we're running them both in tandem and parallel to each other?
I think we're running in parallel and in tandem, Mohit. So Pranava explained it earlier in terms of using it for a better, say, 360-degree customer view. I think we still have the angle of servicing customer better and even protecting the customers. I'll give you an example of the recent cases in Australia. So in Commonwealth Bank, for example. So they've done an analysis of customer transactions. Obviously, KYC doesn't revolve only on onboarding. It also talks about customer due diligence and transaction monitoring. What they've done is they've done an analysis on potential domestic abuse, actually, because what has happened is people can actually send money digitally for as little as 1 cent, and actually you can actually leave a message in terms of the transactions, right? What they have uncovered is they have uncovered an abuse in those messages, actually, which people can do with very little cost. Now, this is a very different angle, but what I'm trying to say is all of this analysis and insights actually still work better to uncover all this potential malicious way, and how can we do as a bank to protect the customer. At the back of that finding, what the bank has done is they have updated the policy, and so that whenever they have uncovered that there is abuse, say through the descriptions of the transactions, they would actually then review the relationship with that customers. So I think I'm just trying to give an examples that is like quite different with the typical KYC when people think about it, and it's more like a personal, or it's more like protecting the customer, which I think is just as important.
No, absolutely. That makes a lot of sense. And yeah, thank you for that. But then, Gilliam, how does this translate into the corporate sector? Does this come into play over there? Do you make the corporate life easier, or is this only on one side of the coin?
No, I think this one is really close to the one to individual banking, retail or private. Myself, I'm a strong believer of the things that need to change in KYC, being exchanging information on KYC. As banks, we're competitors, but definitely not on KYC and AML. So I'm a strong believer of KYC utility, and you see different countries trying to get there. So for corporate banking, it's obviously more difficult because the corporates are cross borders. But for retail, it's definitely coming. And you see it for transaction monitoring as well. It does make sense. And for KYC, it's a gain for the customer because they have better experience. They can have a speed up and onboarding process. And for us, it will decrease the KYC cost. It will reduce the risk. It means you can have real data information on your customers. So, I mean, the MAS, the Singapore regulator, looked at it, and they're still looking at it. Clearly, in the Netherlands, the Dutch banks have made quite some progress on it. And don't get me wrong, it's not a technology discussion. We all know that the blockchain is the solution for it, but it's really not the discussion. The discussion is how we can agree that we collect the data the same way. How can we have the regulator accepting that we're sharing the data? How do we agree on? We have a commercial agreement on paying the one doing the KYC. But that's yeah, I really support this, and I'm even part of some workshop to try to make progress on it.
No, makes sense. And so since you brought in the regulator, you brought in everything else, and Bindru, let me pivot to you. How does regulators play a role in this? How do we bring it all together where it enhances the experience and it makes it a better platform for everybody?
I think KYC has definitely been here for a while, and the requirements is maturing in many countries, especially for the financial institutions, starting from doing something as simple as FR and OCR on the card. Right now, you have more complicated requirements like even driving license or voice recognition being incorporated in. So I actually think in the regulated sector where you need to do KYC, it is moving in tandem, maturing, and for the better good of the users in terms of AML controls and all that. But KYC in many other non-regulated areas is getting to a state of maybe compromising the user experience because the non-regulated space are leveraging on the data to do other things, right? So you realize that for a service that the end user used to be able to maybe just register with your Gmail account, you may no longer be able to do so in the future because every service that you are signing up to, no matter what you are doing, it may be just, I don't know if you can pick an example, say selling your online merchandise. Used to have no KYC, you're going to find a lot of KYC for your teenage girl who wants to sell her something online. You might need to do a KYC. If you ask me, it is not for any AML controls. It is for certain entities to get more data about their merchants. And potentially this data then translates into some kind of a financial service and opens up another revenue stream for the entity. So I do think that KYC in the non-regulated industry needs to be discussed with regards to whether is it moving in the right direction. The technology itself, for sure, is maturing and getting more consistent country to country compared to what we have seen some time ago.
Awesome! Wow, we covered quite a bit. So, in all fairness, you got data sharing on one side, open banking the other, KYC. If you try to stitch the whole thing together, this massive ecosystem in a couple of lines, because you can't have one line, right? What would you have to say about all this, Janita? What would your take be?
I think we're still in our journey to actually make the most of it and even harness all this potential. I think no one has yet to actually make the most of all this, like KYC or open banking or even this data sharing. So we're still way at the start of our journey.
Well, I agree with that. Pranava, your take on this?
I would actually say that if you put your customer in the center and the business that you're doing as your primary thing and have a responsibility, then everything else falls in place. Because once you have a key responsibility of protecting your customer who actually gives you enough revenues on your dividends in your AGMs that you have every quarter. So I think it is the business responsibility, ethics, and integrity that needs to be covered. Technology, as always, is there to help as an enabler, and it will always enable and keep everybody honest about it. So, but everybody starts somewhere, and we are starting, but the speeds are different in different organizations.
Interesting. And Guillaume, from your side, from the corporate side, what's your take?
Well, I think I can leverage on what Pranava and Janita just said. But I would say that in the journey, there is 3 challenges to tackle. The first one is the legacy infrastructure limitation, because you can say, hey, you just have to build an API and you can do data sharing and open bank. It doesn't work this way. First, you need to have a data-driven organization. You need to structure your data to have proper data quality. And if so, then you can have your API. So you can think about having data sharing. The second thing is security. You need to spend a lot of time and money on tackling the risk of cyber attacks. And the third one is compliance. Is you need to engage the regulator, and you cannot do it alone. So I'm happy we do it with other banks, and having the regulator on board to be able to share customer data.
Interesting. Thank you. And Bidru, from your optic, it doesn't have to be tech. It's your optic as a whole, because you guys are in tech and outside. What's your take?
I think it all boils down to, in future, people will realize how important your digital identity is, regardless what transactions you are doing, big or small, regulated or not, it's going to be via your digital identity. So more countries are going to facilitate the right way of using your digital identity. The current way of building every KYC in every service is high chance the wrong way to do so. I think MAS is going about in the right way, whereby everybody will go recognized by that, and there's a proper repository for it. Yeah.
No, and you're spot on, and thank you for that. I agree, because in conclusion, the way I'm seeing this is it's a lot of moving parts, not just government, not just the banks, but also, like you guys said, very honestly, the citizen or the customer. And the good part about the banking sector is you do have customers, because customers have choices. You know, when a citizen speaks to government, they have no choice. You can only change a government every 4 or 5 years. In some countries, 3 when you get to vote. Otherwise, you got one. You really have just one outlet. In banking, you got options, and you're right. That's why the customer is very, very important. Yeah, thank you for your time. I really do appreciate what we've done over here, and hopefully this will be helpful for other people. Thank you.